The silver market is showing signs of tension, and the voices across the industry are becoming louder, sharper, and more revealing. Let's go through what some of the most followed market observers have recently said and break down what their messages could mean for the silver and gold markets ahead. According to Mother Silver, silver, $46.23, minus $2.37, minus 4.88%. Something big is afoot. We stay aware and alert now. With China, Russia, and India taking silver delivery, manufacturers wanting to stockpile silver at cheap prices, silver prices, I can't see silver price fixing going on forever. Endgame. Mother Silver's post captures the sharp decline, silver dropping to $46.23, down nearly 5%. But what stands out is not the fall itself, it's the tone of urgency. Mother Silver points toward global physical demand, nations like China, Russia, and India taking delivery rather than paper exposure. That suggests real tightening in the physical market. Her final words, "I can't see silver price fixing going on forever," endgame, carry emotional weight. It's the frustration shared by many long-term silver holders who've seen paper markets suppress physical price discovery for years. The phrase endgame hints that the situation might be reaching a breaking point, that something fundamental is shifting underneath the surface. Now, from Max Keiser. Silver failed at $50 as the cartel once again steps in and alleases tightness. This post is short but heavy. Max Keiser has been one of the loudest voices on silver manipulation and systemic price control. His use of the word cartel points directly to the belief that major financial entities intervene whenever silver approaches key breakout levels, in this case, $50. Eases tightness implies that paper supply was increased or liquidity was injected to cool down the market. His statement fits into the larger narrative, the idea that the true price of silver might be far higher than what's visible on charts because of these recurring interventions.
Now, right after these community insights, let's hear from someone who's been following these markets closely, Andy Schectman.
Shipments into COMEX in New York or out of, some of it stayed in there, will be roughly 38 million ounces this month of silver, and that will put it on pace to be one of the biggest delivery months ever. This is a deal where at the same time you have one of the largest short positions ever on SLV. Over 80 million shares are naked short. To affect this, there's a battle going on right now where this could end up being one of the biggest delivery months, one of the top 3 biggest delivery months ever, and at the same time, it's getting hammered. And SLV has an 84 million ounce short position, or share, 84 million shares. I guess I don't know if that's ounces or shares. For the last, it's 83.86 million, represents 15% of all outstanding shares, so I guess it's shares. So the shares are being driven down, which affects the price, but yet we're seeing, as they drive the paper price down, massive deliveries in both gold and silver this month. It's a very interesting, hard to decipher market.
Andy Schectman just revealed that the COMEX is set to deliver around 38 million ounces of silver this month, one of the biggest in history. At the same time, there's a massive 84 million shares short position on SLV, about 15% of all shares. That means while traders are driving the paper price down, physical demand is exploding. This shows a clear battle between paper silver and real silver, and history tells us that when the paper price and physical demand move in opposite directions, something big is brewing in the metals market.
Next, Peter Schiff shared, "Gold is a great buy below $4,000, and silver is an even better buy below $47. Remember, it was just a week ago that gold almost hit $4,400 and silver traded above $54.40. Those highs will likely not even be close to the peaks of this bull market." Peter Schiff's words take on a more macroeconomic tone. He doesn't speak about manipulation, he speaks about valuation and timing. Gold below $4,000 and silver below $47, he notes, represent potential value zones based on his long-term outlook. He reminds his audience how quickly momentum can shift. Just a week ago, gold was near $4,400 and silver above $54.40, and that these pullbacks might only be temporary pauses in what he sees as an ongoing bull cycle. What makes Schiff's post stand out is his conviction that this bull run is far from over. His line, "Those highs will likely not even be close to the peaks of this bull market," frames this correction as a setup, not a setback.
Jordan Roy added another layer to the discussion. Also notice how so much research compares gold and silver now to only the 2000s bull. This is a completely different bull, both technically and fundamentally. No comparison is perfect, but 1970s is far closer to reality than the 2000s. Jordan's post shifts the conversation toward historical perspective. He challenges the mainstream comparisons that align today's bull market with the 2000s, reminding everyone that the structure, global debt, monetary policies, and inflation dynamics now resemble the 1970s more closely. Why is that significant? Because the 1970s bull run was explosive, driven by inflation shocks, currency devaluation, and geopolitical uncertainty. If today's cycle truly mirrors that era, the implications could be substantial, meaning we might still be in the early to mid phase of this run, not near the end. Finally, Rashad Hajiev shared, at 5K gold price and gold to silver ratio 72, immediate support, silver could soar to $70 already in November. Rashad's post takes a more technical approach. He connects gold's potential move to $5,000 with the gold to silver ratio, which currently finds support around 72. If that ratio holds and gold rallies, his projection of silver hitting $70 becomes mathematically reasonable within the model he's using. The key phrase is already in November. It reflects a near-term outlook, not a distant prediction. That shows confidence in a sharp, short-term move, driven possibly by ongoing physical demand and supply constraints. Across these posts, one message echoes clearly. This is not a quiet market correction. It's a storm of different perspectives converging around one truth. Silver is reaching a critical chapter. Mother Silver highlights global demand and calls it endgame. Max Keiser points to price suppression each time silver challenges $50. Peter Schiff focuses on long-term opportunity beneath current levels. Jordan Roy reminds us this bull cycle is more like the inflationary 1970s. Rashad Hajiev projects silver at $70, possibly within weeks. While their tones differ from emotional to analytical, they all agree on one underlying theme. Silver is in motion, and whether it's intervention, supply pressure, or macro policy shifts, the market is building tension that will eventually demand release. As always, these are market observations, not financial advice. The precious metals market is volatile, driven by complex factors that no one fully controls. This analysis is for informational and educational purposes only.